Welcome to Video 12 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. As a reminder, videos 1 through 6 in the series provided guidance on how to get started using the software and data entry to build the base case. And in videos 7 through 11, we covered how to make recommendations in the software. This video will cover the Long-Term Goals tabs. When you first log into the software, the first page you come to is the Manage Cases page. You can choose to work with an existing case or create a new case. I'm going to select the example solutions case that I've been working in previous videos and entering recommendations. Now that we've made some preliminary recommendations regarding insurance and debt management, we're ready to look at analyzing the savings needed to reach the client's goals. We'll start by looking at the Long-Term Goals 1 tab. On this tab, we have calculators for retirement and education needs. Let's say my example client stated a retirement goal of age 62 with a 90% wage replacement ratio, no Social Security, and life expectancy of age 90. On the left side for the retirement goal, I'll start by giving it a name related to the stated goal. Age 62, 90% wage replacement ratio, no Social Security. Then I'm going to go down and click on the Calculate and Save button just to save the goal. Now I can fill in the remaining information for the clients. Current age is 40. Expected age at retirement is 62. Life expectancy at retirement is age 90. And the retirement goal was stated as 90% of current income of $85,000, making the retirement income goal $76,500 in today's dollars. The clients did not want to include Social Security, so we will leave that at 0. Notice that line 7, Net Needs, the cell is filled in blue. That tells me that the software will calculate that for me. The next field I have in white is for the inflation rate assumed. That pre-filled at 3% based on information I put into the client name and income tab. Line 9 is also a blue field indicating the software will calculate it for me. And line 10 is where I enter the expected portfolio earnings rate. I'm going to fill that in as 9.77% as calculated on the Investment Planning tab based on the client's risk tolerance questionnaire. Now I have 2 more white fields that are not filled in yet, line 13, current retirement assets, and line 16, current annual savings. We have 2 choices on how to approach client goals. We can segment them with each goal having its own bucket of savings, or we can use the present value of all goals approach, which views all goals from a single bucket of savings. I'm going to use the present value of all goals approach, so I don't need to fill in these 2 areas on the retirement goal page. All I will need is the present value of the goal on line 11 to use for my present value of all goals calculation on the Long-Term Goals 2 tab. At this point, I'll just click on Calculate and Save. And now the software has filled in the blue areas, and I do have the present value of the retirement need indicated at $254,295.56 on line 11. Now let's say our example clients also want to save for college for the twins. Let's give them a goal of $20,000 for tuition in today's dollars, starting at age 18 for 4 years each, with a portfolio return of 9.77%. On the right-hand side of the page, I start with the child's name. Remember, the children were named Thing 1 and Thing 2. They are twins, age 3. The goal was to start college at age 18 and spend 4 years in college at an annual cost of $20,000 in today's dollars. The education inflation rate pre-filled based on information I entered in the client name and income tab, and the education portfolio earnings will be assumed to be the same as the portfolio earnings calculated on the Investment Planning tab. Now I can hit my Calculate and Save button, and the software calculates the present value of the education goal on line 10 that I will use in my present value of all goals approach on the Long-Term Goals 2 tab. Of course, I do have 2 children, not just one, so I'm going to go to the record for thing 1 and duplicate that record. Then I can open that one and change the name to thing 2. Since they're twins and the goal is the same for both of them, I can just calculate and save, and now you can see that I have records for both children for the education goal. Now I'm ready to go to the Long-Term Goals 2 tab. On the left, we have a place to calculate other goals, such as saving for a boat or a vacation home. It works in the same manner as the retirement and education goal calculators we just looked at, so I'm not going to give these clients any other goals in that area. On the right is the calculator for the present value of all goals. This is the one I'm interested in because it's where I combine all of the goals together. I'll title this one the same as the retirement goal that I was working with, age 62, 90% wage replacement ratio, and no Social Security. And then I'll click on the Calculate and Save button just to get that name saved. Now I need to go back to the Long-Term Goals 1 tab, and I need to get the information regarding the present value of the goals. Under the retirement goal, I click on the scenario that I'm looking for, and I go to line 11, the present value of the retirement needs, and I can copy that, go back to my Long-Term Goals 2 tab, open the record I'm working with, and paste that goal in on line 2. Once I have pasted that number in for the present value of the retirement goal, I go down and click on the Calculate and Save button. And now I can go back to the Long-Term Goals 1 tab to get the information for the education need. Line 10 is where I will find the present value of the education cost today, and I can copy it, go back to Long-Term Goals 2 tab, pull up my record, and paste that number under the present value of education for child 1. Since they're twins, I can paste the same number for child 2. And again, I can go down and hit the Calculate and Save button to save that information. Now I can go back and fill in the rest of the information. The clients are currently age 40, and for this goal, they wish to retire at age 62. There are no other lump sum goals and no emergency fund goal for line 5. So I will calculate and save that information, and now I'm ready to work on line 7, the current resources, and notice that it reminds me that this is going to be under investments and cash. So I'll go to my Reports tab and pull up the current year balance sheet with recommendations. Here we can see cash and cash equivalents at $105,000 and investment assets at $185,000 for a total of $290,000. Let's go back to the Long-Term Goals 2 tab, open our record, and fill in that information on line 7. And again, we will hit the Calculate and Save button. The next line I need to fill in is line 10, the investment rate of return. I'm going to assume that they maintain the same risk tolerance in retirement, and we'll use that 9.77% calculated rate of return. And again, we'll save that information. Finally, now we need line 12, the current annual savings. Here I can look in a couple of places. On the Reports tab, I can go to the current year income statement with recommendations, and I can see that they are saving $24,000. The problem with looking here is that it does not also show me the employer match, so I have to remember to add that in. A better place to look might be under the ratios and recommendations for the current year with recommendations. If I go to page 2 and I scroll down to the overall savings rate, I can see the total savings of $25,200, which includes the client savings and the employer match. Now we can go back to our Long-Term Goals 2 tab, open the record we're working in, and on line 12, put in the $25,200 that the client is currently saving, and we'll hit our Calculate and Save button. Notice on line 13, the annual increase necessary to achieve all goals is a negative number for these clients. What that's telling me is that they don't need to increase their savings in order to meet the stated goals. They can meet the goals based on what they are already saving, assuming we're correct on our assumptions for the investment rate of return, the inflation rate, their actual age at retirement, and their life expectancy. What if that number were a positive number? That would indicate they need to save more than what we have already recommended, or we need to consider adjusting goals. For example, we might recommend they retire a year later or with a lower wage replacement ratio, or that they include Social Security. Let's pretend for a moment that we did come up with a positive number, meaning we need to make adjustments. I might go back to the Long-Term Goals 1 tab and create a new retirement scenario. For example, we might recommend that instead they retire at age 63, keep their 90% wage replacement ratio, but include Social Security. Now I can create that new record, hit the Save and Calculate, and you can see that I can select either of those two scenarios under my retirement goals. I could then take my new numbers to the Long-Term Goals 2 tab and create a brand new record for this particular scenario under this tab as well. And I would simply use the new numbers that I calculated on the previous tab. Clicking on the Calculate and Save tab now creates a second scenario under my present value of all goals. This allows us the opportunity to create multiple scenarios for retirement funding and multiple scenarios for the present value of all goals to analyze what may be best for the client. This concludes our review of the Long-Term Goals tab. In the next video, we will cover the Calculator tabs and the Goals Report tab.